let's also discuss the overall market. And Sandip Agarwal, the fund manager at Sowilo Investment Manager, joins in today to discuss the investment strategy at this point. Sandip, what are the pressure points that you are viewing in the market? 24,200 given, that particular level being given up by the market is a cause of concern.
Yeah, hi, and good afternoon, and thanks for having me on the show. So, as you rightly pointed out, the bigger sectors are not contributing to the market. The banking space has not been contributing for quite some time. Particularly, the private banks have been underperforming in a big way. That has been a long story which was going on for long. Thankfully, IT has started contributing in some way in last one and a half month. Pharma has been doing well, but it has very low weight overall. So, the bigger sectors like FMCG and banking has not done so much to contribute, and that is the bigger pressure point in my view. And markets won't move in a big way till the banking space or some of the other spaces do better than what they are doing right now. So it will remain a bottom-up stock-specific market from the mid-cap side or the small cap side where there is a clear visibility or earnings growth. Those are the stocks which people will lap up, and unfortunately, because they don't have weight in the index will remain range bound. That is what my sense is.
All right, so Sandip, since you're saying index will remain range bound, and as much as the market believed that this particular war situation and its impact will be short term, it's been almost 6 months that buy on dips in some of the large caps and the banking sector is what experts have been saying. Now is there time to really recalibrate the strategy? How much would you assess in terms of cash deployment, and how much to keep for a further downside to deploy later?
So, we firmly believe in philosophy that when client gives us money, then he has taken a call that he wants to invest. So, barring for operational reasons, we generally don't believe in keeping too much of cash because that is not the mandate which client has given. But what we do is that based on our outlook on macro basis and all, we keep switching between the sectors. So, as mentioned that after March, we have gone significantly overweight in IT. Thankfully, that has done well. We were zero weight till first half of March. We started accumulating stocks, and I think we have reached more than 15 or around 20% now, and we still have appetite to go more 5-7% because we are extremely bullish on the sector, which includes hardware. So it is not a call only on IT services, but it also is a call on the hardware side of it. And honestly, we have made very good money on the hardware side and even the services side in last since March. And we believe there is a long tailwind still from here.
Sure.
So we will have overweight there. It is a defensive also.
All right, Sandip, thank you so much for sharing your thoughts on the markets and, of course, many sectors of choice where you can still make money at these levels. Thank you so much, Sandip. All right, moving on to one company in an